Energy has been the worst performing stock sector so far this year, despite the fact that oil prices have actually crept up a little bit more. Welcome to Trading Nation. I'm Brian Sullivan. Rich Ross with Evercore ISI and Stacey Gilbert with Susquehanna are your team. Stacey, I'll begin with you. Do you expect a turnaround from the energy stocks anytime soon?
Yeah, no, I think that investors are just kind of reallocating with really the last couple of months has been all about the Trump trade. So looking for other areas that have been unloved. If we think about energy, it was your, not your darling, but your headline sector for 2015 and most of 2016. What we see from a perspective of both the ETFs and the options is money is still moving into the energy sector. Clearly not as much as it has been, but you've had $4 billion move into energy-focused ETFs just since the Trump election. Again, outshined by your industrials or your financials or your real names that were completely unloved for a very long time. But I would say that the sentiment is still wanting to own energy. If we look at it from the options side, we see some protection. XLE, for example, is up 27% over the last year. Why wouldn't you buy protection? Particularly when XLE, just like almost every other ETF and stock out there, the cost, the risk reward for owning that protection is, in your bottom quartile. So it's fairly cheap here. So long story short, yes, I think energy is, I don't think it's unloved to the extent that people think. I think you had a little bit of a rotation, and I would expect investors to continue to want to own it here. Okay,
want to own it there. Rich Ross, technically, do you see the same thing? Should we want to own the XLE?
I do, Brian. In fact, I think the pullback has created a compelling tactical buying opportunity for a trade that remains broadly intact. First, on the underlying commodity itself, it's taken a lot of punches in the early going. Yields have come off. Trump's come off a little bit. People questioning that reflationary narrative. But crude stands tall in the pocket, $54 a barrel. I think we get a breakout above 55, and that changes the whole narrative. Now, look at the XLE. Textbook, 10% pullback, right to trend, right to key support at the 200-day moving average. When crude breaks out, this is where you're going to get the big bang for your buck there in energy. And if you zoom out and look longer term, you see the power of that setup, Brian. The reversal in the primary trend, the multi-year head and shoulders bottom, the pullback to the neckline of that base of support, all of which suggests that energy, its weakness is divergent, but that's created an opportunity and a delay, Brian, not a bearish divergence. You want to take advantage of this pullback, and you're going to see some reversion. Energy will move higher on the offensive, and some of your defensive groups which have shined, your utilities, your staples, your healthcares, those will come off commensurately as that reflationary narrative reignites itself.
All right. We are watching that inflationary narrative and the price of oil. Thank you very much, Rich. Thank you, Stacey. Appreciate that. Folks, two bullish views on the XLE. I'm Brian Sullivan. Thanks for tuning in. We'll see you next time.
Hey there, thanks for checking out CNBC on YouTube. Be sure to subscribe to stay up to date on all of the day's biggest stories. You can also click on any of the videos around me to watch the latest from CNBC. Thanks for watching.